Hi guys, I'm Nicola McKenzie, founder, mortgage and insurance advisor here at Dunham McCarthy Mortgages. And in today's video, I will be doing a question and answers session. So answering your property, mortgage and insurance related questions. So to find out more, stay tuned. Guys, if you've not already subscribed to this channel, then make sure that you do before we go any further into this video, and also hit the notification bell so that you never miss any future uploads. I also want to point out that here at Dunham McCarthy Mortgages, we specialise in providing advice to our clients in relation to mortgages and insurance. So if anything that I cover off in today's video is something that you want to know more about, then you can head over to our website, dm.mortgage, and there you can book in for a mortgage advice appointment or an insurance advice appointment, and you can do that free of charge, because here at DM Mortgages we don't monetize this channel to give you as the viewer the best viewing experience. So in return, to show your support when the time comes to look at mortgage or insurance options, then make sure that you get in touch. Now, it's been quite a while since I did a question and answer session, so sorry for making you wait so long, guys. Please can I ask as well, make sure that you carry on dropping questions in the comment section, because without those questions it's a bit difficult to do a Q&A session. But I'm not going to waste too much time today. I'm just going to get right into it, and let's look at the first question, which is from 96 News. So 96 News has asked, is the Help to Buy scheme still available in 2023, and do you pay interest on the loan? So answering the first part of that question, the Help to Buy scheme is no longer available in 2023, I'm afraid. The Help to Buy scheme closed on the 31st of October 2022. Now, there are other schemes out there, and I did recently do a video called Buying Schemes for 2023. So I would advise, if you are a first-time buyer, to check out that video, which was released a few weeks ago. But in summary, there's nothing directly that's out there yet to replace the Help to Buy equity loan scheme. Now, the second part of your question asked if you pay interest on the loan. So if you already have a Help to Buy mortgage under the scheme, then yes, you will start to pay interest. So it's interest free for the first 5 years, and then after that you will start to pay interest on the amount that you borrowed. So yeah, watch this space. Hopefully more schemes will start emerging, but right now the Help to Buy scheme is currently closed. Ravies has asked a question. So, can anyone here tell me which is better, HSBC critical illness or Vitality critical illness? Well, that is a really good question actually, Ravi. I'm assuming that you are considering taking critical illness out, and the first bit of advice that I would give you is to make sure that you do get advice from us, because the differences with critical illness cover do range significantly. You've got some insurers that will cover as little as 3 illnesses, cancer, stroke, heart attack, for example, whereas you've got some insurers that will cover many more conditions, which in turn will significantly potentially increase your chance of a successful payout. And without having experience in the sector, it's very difficult to know exactly which policy might be best suited for you. And the team here as well do provide free advice and arrange critical illness cover for our clients free of charge. So it is worth getting in touch with us, because we get paid by the insurer. So therefore we don't charge our clients to arrange cover. And also, I should also add in there actually that we do provide a complimentary will writing service to everybody that we arrange critical illness cover for as well. But in direct answer to your question, it really does depend, and I know I say this a lot, but it does depend on your situation. So I would consider HSBC and Vitality to both offer comprehensive options, but they do things very differently. So depending on what you're trying to achieve with your critical illness cover, Vitality, for instance, again, they work mainly on a severity basis. So depending on the severity of the condition that you have, they will pay out a percentage of how much you're insured for. Now that works very well for some people, not so well for others. And also as well, they have many different add-ons. So you can add things in like booster options, in which case that then means if you get something like a cancer, stroke or heart attack of a certain severity, you'll get 100% of the payout instead of 25%. So the point I'm making is that it's really impossible for me to just say as a blanket statement, is Vitality better? Because that depends on your situation, but it also depends on what add-ons you're including with the options Vitality offer as well. It's a little bit like comparing apples with pears. So yeah, I would say you need to get advice really, because what we would typically do is assess your situation, then do a direct comparison between two policy options and tell you based on your requirements and priorities which option is right for you as an individual. Again, just to expand on that, you know, if you have got, for example, strokes in your family history, then it might be that we need to look at a provider that covers that particular condition better than others. So it's very much driven by you as an individual rather than just generalising and saying one's better than the other. So a question from Daily Headlines. Daily Headlines has asked, if the Bank of England base rate is going up, why are fixed rates going down? That is a really good question. Bank of England base rate is now at 4%. It's going up largely due to inflation. Inflation is still way above where the Bank of England want it to be. They have a target of 2%. You know, more recently we've been exceeding 10%. So a lot of the reason that the base rate's going up is largely driven by inflation, and there's lots of factors at play as to why inflation is still much higher than we would like it to be. Fixed rate mortgages are not directly linked to the Bank of England base rate. They are reliant on something called swap rates, okay? And what a swap rate is the lender, or the rate that a lender will pay to financial institutions in order for them to get fixed funding for a set period of time. So swap rates have been gradually reducing recently. In turn, that means that the fixed rates that lenders are offering to their customers are going down. So just because the Bank of England base rate goes up, guys, if you're looking at fixed rate mortgages, that doesn't mean that fixed rates are going to go up. Actually, the contrary has been happening, and fixed rates have been going down even though you've seen the base rate go up. And the reason for that, as I've said, is because of swap rates, because swap rates are based on what the markets think interest rates will be in the future. So that's me just giving you a really brief summary, and I hope that helps. Now, Spaghetti Russ has asked, thank you, great video, thank you, Spaghetti. I'm on a fixed term repayment plan. If I make an overpayment, will my monthly repayment reduce even on a fixed term deal? Really great question. Depends on the lender. So yes, lenders will often ask you, would you want them to recalculate the monthly payment so that the overpayment reduces your monthly payments? Or instead, would you rather keep the payment as it is but reduce the term? So it does depend on the lender as to whether or not you will be offered that choice or option, but it is possible, so you would need to check with your lender. Okay, Pete Jose has asked, hey Nicola, thanks for the great information, thank you. What are your thoughts on builders' incentives with new build properties, and can you do a video to explain how lenders view them? That's a really good idea actually, Jose. I probably will at some point do a video on this topic, but whilst we're here in the Q&A, builders incentives, you have to be careful when you are accepting builders incentives. You know, what conditions are they putting on those incentives is a first thing to establish. But not only that, it has to fit the lender's criteria, because you're quite right, not all lenders are going to treat incentives in the same way. So for example, some lenders might say, we'll only accept incentives if they don't exceed a certain percentage of the property value. So lenders will potentially restrict incentives, and I have seen some cases where a builder's tried to throw in free stamp duty. But again, because the stamp duty has been quite a sizable amount, that has been problematic when it comes to fitting that with the lender's criteria. So It does vary depending on the lender you're applying to. Again, I'd just say make sure that you're getting mortgage advice so that you know that the lender you're applying to accepts that particular incentive. Contact us if you want us to help you. Now, I've got a question from Christoph Browarski, who wants to know, what do you think about a discounted variable rate that lenders offer at the moment? It could be as low as 2% less than the standard variable rate for a fixed period of time. What would you advise about that option, please? For those of you that don't know, a very brief explanation of what a discounted variable rate is. So banks have a standard variable rate. So that's the rate that you would usually automatically go on to once you come out of the initial introductory period for your product. Now, standard variable rates tend to be one of the least competitive variable rates out there, generally speaking. What a discount rate is where you're getting a discount off of whatever the standard variable rate is with that particular lender. So if the standard variable rate with a lender is 6% and they're applying a 2% discount, that means you'll pay 4%. If the standard variable rate goes up or down, then your interest rate will go up or down with that change. Now, the one limitation with a discount rate is that it's based on the standard variable rate, and the standard variable rate is a rate that the bank sets. It's not, whilst the Bank of England base rate does influence a standard variable rate, but it's not directly linked to it because the bank also takes into account their internal targets amongst many other factors when setting their standard variable rate. So there is more uncertainty with a discount variable rate is what I'm saying, whereas a tracker rate is still a variable rate, but in most cases a tracker rate directly tracks changes in the Bank of England base rate. So you've got a bit more understanding of how your payments will change. If the base rate changes, then your payments change with a tracker rate usually. So a discount rate, again, it's impossible for me to say, Christoph, if that is the right option for you, because, you know, there isn't, and this goes for anyone that asks me advice on their individual situation in the comments section. It just wouldn't be right of me to give you advice on your individual needs, because a discount rate is great for some people, it's not so great for other people, and determining if it's a good option for you would involve me sitting down with you and assessing your situation. So it's not that it's a bad product, it's just that it has a time and it has a place. So if you are considering a discount variable rate, just make sure that you're going into it with your eyes wide open. You know exactly what the pros and the cons are. The main con being it is a variable rate. Your payments can change, you know, outside of your control. But yeah, it's definitely worth speaking to our team. Now guys, that's everything for today's Q&A session, so I hope that's been useful. Make sure that you head over to our website, dm.mortgage, if you are looking at mortgage options and or insurance options, because we can help you with both. Subscribe to the channel if you haven't already. Hit the notification bell, and just tying into my earlier comment, mortgages and insurance, we work from lots of different products to compare what is right for you. So we're not just tied to one or two options, we look at a range of thousands of mortgage products to make sure we're getting you the right deal. Speak to us, we're here to help, we want to help. So yeah, I hope you've enjoyed today's video, and I'll look forward to seeing you in the next one.